All right. Hello, everybody, and welcome to the April 12th, 2022 USDA Beginning Farmer Rancher in the Know. My name is Erica Molmer. I am a business and cooperative program specialist with the USDA Rural Development, and I will be your host for today. Over the course of this session, you'll meet the other members of the Oregon USDA Beginning Farmer Rancher team who represent the Farm Service Agency, Risk Management Agency, and Natural Resource Conservation Service and Rural Development. Additionally, I'd like to introduce our Zoom technicians for today, Corey Owens and Mariela Castaneda. They will help ensure that the programming runs smoothly and guide us through the breakout group sessions after the presentations. This is the third of 4 quarterly sessions aimed at providing beginning farmers and ranchers the tools they need to be successful and navigate working with USDA. Part of the focus of today will be on disaster programming from the respective agencies. Then we'll move into agency-specific breakout sessions where you, the participant, can choose with whom you would like to visit with. There will also be poll questions scattered throughout the presentations to better help us understand who you are and help us form our final In the Know session in July. So our first poll question will be popping up on the screen here before we get started. So please take a few minutes to read through the questions and answer them.
Sorry, let me get the poll going. Can you see it?
I'm viewing the poll results.
Yeah, that's not right. Hold on, everybody. Close the poll, open the poll, end the poll. Can you see it now?
Yes, I can.
Can you answer a question now? Mariela, do you want it?
I have the end poll option on my end, so it should be, participants should
live.
be seeing it,
Stephanie,
and I'm seeing
there we
people
go.
answer.
Okay,
Yep.
Thank you, someone. There's 3 questions there. Apologies for that. And if you're just on the line, on the phone, obviously you're not seeing the poll if you're not on a computer. So, but the questions are just helping us gauge who's here today, beginning farmers, ag professionals, how well you know USDA, and then if you've ever worked with USDA before. So I'm going to go ahead and end the poll and share the results so folks can see. It does not allow you to skip a question. I apologize. We need to add not appropriate. I'll fix that. Sorry about that, Janelle. So we have some beginning farmer ranchers. We've got folks who are new to hearing from USDA. That's great. Folks who've heard about us through newsletters, folks who are current clients, welcome. And then looks like all the agencies have someone who have worked with them. So great. Welcome, everyone. Really excited to have you all here today.
Yes, thank you so much for participating in that poll. It really does help us get a good feel for who our audience is and how we can best assist you. So first up, I am pleased to introduce our beginning farmer rancher representative from the Farm Service Agency, Derek Johnson, and his colleague Deborah Arntz, who will be discussing the various FSA disaster and loan programs available to you. Derek, take it away.
All right, you can all hear me, correct? Perfect. Okay, so I will get this all started. Just kind of a footnote. I've got Deborah on here as well. She's the CED out of Malheur County. She's a great CED. Really, what the CED does in every single county is run that office on the program side. So no matter where you are, go to your local FSA office and talk to your CED. That's really one of the biggest things we wanted to talk to you guys about today, especially seeing how many beginning farmers are here. The end all be all is if you guys don't talk to us, we can't talk to you. And the more information you give us, the better information we can give you. So before we start any of this, if you guys haven't talked to your local FSA office, get in there, have a conversation, and Deb will kind of shine some more light on what you need to do with that office to establish that connection and get started. So I'm on the farm programs or farm loan program side, and Deb's on the farm program side. So we're going to start off with loans, see how to get experience, how beginning and new farmers can get loans from not only me, the FSA, but other people as well. And then we'll dive into the program side. I'll get Deb on and we'll go from there. So I've got a presentation here. I'll pull up, give me 1 second. Okay.
It's coming up, Derek, and looks like we can see your slides. Looks good.
Awesome. Okay. So here again is my information. I'm a farm loan officer out of Malheur County. I'm the beginning farmer and rancher outreach coordinator. So if you guys, at the end of this presentation, at the end of the whole meeting, you've got any more questions or were embarrassed to ask anything, you can always give me a call or jump into the breakout session after this, and we can talk a little bit more about how to work with loans together. And again, I'll have Deb in my breakout session too. She'll be able to talk about the program side as well. So just kind of jumping in. The end all be all is the FSA has pretty much two options for you. As a beginning farmer, you're going to need funds to operate on. So that would be an annual operating note. We can get you those that'll help you finance, feed costs or any kind of reoccurring expense that happens every year. And we can also help you buy cattle, equipment, and finance certain improvements to your real estate. So the end all be all is we can do an operating loan or we can do a farm ownership loan, which would be a real estate loan. They're two separate asks. So I don't like it when people walk in asking to buy a business because there's a lot that goes into that. A business isn't just, one big loan and you'll pay it back eventually. A business is pieces of an operation that really form a bigger one, right? So if you're a cattle operation, you're going to have 3 different notes, assuming that you've bought real estate. You'll have a real estate note, and that'll be a 30-year note to buy whatever kind of land you're going to be operating on. You'll have a term note that'll buy all your equipment or your cattle, and you'll have an annual operating note, and that's going to pay for feed for the cattle and certain other things that you may need through that year. So again, we can do all those things, but the biggest issue here is experience. I can give up to a $400,000 operating note, and I can give up to a $600,000 farm ownership note. However, the experience is required when it comes to an operating note and a farm ownership note. I need 3 years of qualifying experience to get you ready for a real estate note. I can't give it to you. It's really hard and fast rule. But there's ways to get that. I can substitute 1 or 2 years out with education, with military service, or substantial management experience. And really, this is all about presentation. So when I say substantial management experience, I need that person to act as an owner operator or in the capacity of an owner operator when they're doing their management abilities. So that'd be buying hay, signing off checks, putting cash in the bank to pay bills at the end of the day. That's what that management experience will come down to. So the end all be all for a real estate loan, though, is if you need 3 years and I can only substitute 2, you'll have to have at least 1 production cycle under your belt. So that's something I want to make sure everybody understands, is even with a beginning farmer down payment loan, which is that program for beginning farmers, I still need 3 years. So just to kind of launch onto that, the beginning farmer down payment program is cool, especially for people that have a little bit of assets or have a little bit of cash at their disposal, but they haven't been farming for very long and are struggling to apply for a full commercial loan from a local ag lender, or the local ag lender is balking. One thing we can do for beginning farmers with the 3 years of history is we can get them a down payment loan. So the producer, or the applicant rather, would put down 5%. FSA would finance 45% of that purchase, and then a third-party lender would finance the remaining 50%. So this is a really good program for people that are on the fence between being able to get financing from FSA and being able to get financing from a regular bank. Because the end all be all for the FSA is we're the lender of first opportunity and last resort. If you could get a loan from somebody else, I need you to go there first and have a conversation with them. as the federal government, I'm not allowed to compete with anybody else that would try to finance you. So those are some of the bars to getting these loans. So one of the biggest questions is, how do I get experience? What do I do? Because it's difficult to walk out, find a lease, and just start operating out of nowhere. So I'm going to jump onto the next slide. And
Real quick,
luckily
Derek,
enough,
you have a question in the chat. Does management experience in another field count towards the 3-year requirement?
I'm gonna go back to that presentation point. It really comes down to that. If you want to use, let's say that we had 10 years of experience, building houses, running a business, running those finances, and doing everything that came down to it, I might be able to argue that the financial aspect of that business gives you the management experience to further you in this business. But again, it comes down to you showing me what you've done and how it would pertain to the new operation. So the question is a maybe. The answer to that question is a maybe. I'm not sure if that helps. Okay. Is that all the questions, Corey?
Yep.
Perfect.
Thank you.
Thank you. Yeah, you bet. Okay. So when it comes down to experience, it really can be one of the biggest hurdles. We just had a question on it, and there's a lot of ways to interpret what experience is and how to get it. But here's two good ways that the FSA offers for people that haven't farmed before or are younger and have the opportunity to start farming to get financing and get that going. So the first option would be a microloan. It's a $50,000 loan. I can do it on real estate and I can do it on operating. The only thing is I'm going to talk about a microloan in the frame of an operating loan, because a lot of the times, if you can't get an FO or a regular direct real estate loan from me, you're not going to qualify for a microloan from me either, because you still have to have that 3 years of experience. So we do have these available. On the operating side, the history requirement doesn't exist if you have a mentor. So we'll waive the 1-year history requirement if you have a mentor, which is somebody who's willing to help you, give you advice, and does what you're asking us to do. So a mentor wouldn't be, so my dad runs an alfalfa ranch or an alfalfa farm, call it what you will. We've got cattle too. But if I asked to go grow potatoes using my father as a mentor, where he's just doing hay, there had to be a little bit of explanation. That experience, it does correlate, but would it ensure the success of your operation? Probably not. So what we'd like to see for a mentor would be somebody in the SCORE program. It's a program of mentors. If you look that up, it's easy to get into and see what you need. But a SCORE mentor or somebody that's doing what you're asking us to do. So in the frame of my father, if I was to ask FSA to finance a 20, 30, 40, 50 acre alfalfa operation, using my dad as a mentor, that would make sense and be something I could use for experience. And again, you get $50,000 on the operating side. We can use that for cattle. We can use that for leases, for annual operating expenses, anything that you need to pay in 1 year that you're probably going to pay the next year. And same thing for equipment, cattle, and things like that. Microloans are perfect for somebody to get the experience they need and start. Because again, on the real estate side, everybody wants to have a piece of property to farm on. But again, the issue is getting that experience. So this is a good way to start. A separate way, one of my favorite things to do, I'll be honest with you guys, it's really the easiest loan I can do. It takes me a day or two, but is a youth loan. So we have a $5,000 youth loan available to anybody who's under the age of 19 and is participating in a youth ag organization. So FFA, Forage, anything on the tribes. They have a lot of youth organizations for their producers. Any of those would be part of an eligible program for the youth loans. So you can have a kid come in. We can buy them a steer for the fair. We can get them a few breeding pairs so they can start to calve out and grow their small herd. And successful repayment of one youth loan counts as a year of experience when you're moving up. So you'd be, as soon as you turn 18, you'd be automatically eligible for not only a full $400,000 operating loan, but also the $50,000 micro loan without any questions asked or any additional explanation. So think about a youth loan, parents are going to know you got to co-sign, you're involved. And a lot of times we see the parents are the leaders of the FSA or the Forage unit itself. So that's totally a viable option. If you want to start a 4-H organization just for your kids so they can go and take advantage of this program, you're more than welcome to do so. Just have a conversation with us so we know what's going on, and we can get you going to that way.
Derek,
So
you do have a question in the chat. Does a mentor mean someone to consult with in your immediate area on the ground, or could it be someone further away that you could call or Zoom?
So that'll be a discussion with your loan officer. Kind of depends on what they're comfortable with. For somebody, let's say you're out in one of the remote areas that Malheur County has. Let's say if you're out in Ironside, you're not going to have internet. And so the mentor for me would be difficult to use over Zoom or anything like that. Of course, we've all got options, especially for SCORE. I'm going to bring that up again, especially for SCORE mentors. That would absolutely be something we can talk about and accept. A lot of those mentors are going to be located in Western Oregon anyways. So it'd be a conversation. Again, it'd be part of that when we do a youth loan, really even a micro loan too. There's what I like to call an entrance counseling, right? We sit down, we talk about what we're going to do. And I imagine that'd be part of the conversation. So I'm sorry, this isn't a good answer, but maybe.
Thanks, that's it.
Perfect. Okay, I'm going to move forward here onto the next slide. Actually, hold on one second here. I'm actually going to bring in Deb at this point. I do have a few more things to add. There's always more that we could talk about when it comes to loans and getting financing. But the end all be all is if you can get a loan from somebody else, you're going to have to do that first. But there's never any harm in calling me and asking. I do have a lot of different options. And when it comes down to the day and age we live in, one of the good options I have that really isn't for beginning farmers, it's really for an established farming operation. But an option I have too, given the drought and the market and everything, is an emergency loan. So if there's ever a situation where we have an established producer that isn't able to get a loan somewhere else or has a declared disaster in their area, which again, that'd just be a conversation with the county office. Are we in a disaster area right now? We can offer emergency loans at reduced rates and help people get financing in a situation where nobody else will lend to them. So those are options as well, but let's talk about that in the breakout session. Everything gets hairy when you get to emergency loans and doing disaster financing. So what I'd like to do at this point is I want to transition over to Deb. I've brought Deb in today because she's going to talk about some of the disaster programs we have on the farm program side. I'm not as well versed in it. Farm loan programs and farm programs are two sides of the same sword. So at this point, I'm going to jump on to the next slide, and then I will go ahead and bring Deb in. All right.
Good morning, everybody. I'm sorry my camera doesn't work on my computer, so you'll just have to picture me in your mind, I guess. Can everybody hear me?
Yes, ma'am.
Okay, so I have blonde hair, glasses, and I'm wearing a red sweater. So picture that and we'll move on without the camera. I apologize for that. So one of the first steps in establishing yourself as a beginning farmer or rancher in the Farm Service Agency on the farm program side is completion of this form. It's a CCC 860. And it did, the part C down here at the bottom that is highlighted is where you certify that you are a beginning farmer or rancher, which means that you have no more than 10 years of experience in farming and ranching. And then there's a signature spot. So you would complete this form upon your visit to the FSA office, and we would set up some farm records for you in our office. If you already have cattle, you are probably running those cattle somewhere. So we could set up some farm records for you and begin to show some history of farming and ranching that on the program side that you could then use for the loan side to gain your history. It might just be something simple like you're running, you know, your 4-H or FFA animals on your parents' farm, and they're having a few calves every year and you're working at building your herd. So we can set up some farm records and get you some history to show that you are a farmer or rancher and a beginning farmer or rancher. One of the main aspects of being able to participate in any of our programs is our acreage reports. They are used for all of our programs to determine the acres that you have available for participating in the farm program side of things. And you declare on there your pasture acres that you graze your cattle on, or the crops that you are farming on, depending on what you have. And it could be grazing that is by cash lease, or perhaps on an AUM basis on mom and dad's farm, or whatever you happen to have. So we would do an acreage report for you that would then bring information over to our programs. So the first program I'd like to talk about is the Non-Insured Disaster Assistance Program. This is it works like an insurance program for the crops and pastures that you have. By declaring yourself a beginning farmer or rancher, you would not have to pay any of the fees, the administrative fees that are required for this program. Normally, most farmers and ranchers have to pay a fee of $325 per crop that they intend to get coverage for under this program. But as a beginning farmer or rancher, you do not have to pay that $325 per crop for the minimum coverage. The minimum coverage ensures loss payment if you have losses on your crops or your pastures in excess of 50%. And it pays 50% of the price, the established price that FSA has for those crops or pastures. And this fact sheet has a list of some of the crops that we cover. So this coverage level section here on this fact sheet talks about the 50%, actually 55% of the price for the crop. There are buy-up options where you can get up to 65% of the production level and 100% of the market price. The beginning farmer rancher designation gets you out of the administrative fees for the minimum level of coverage, but the buy-up levels are based on a premium, and you would have to pay those premiums in order to get the buy-up coverage. To apply, you just fill out an application for payment by December 1st in Malheur County for the crops that you want to cover. And it talks about the $325 per crop, up to $825 per producer, per administrative county, not to exceed a total of $1,950. So pasture can be covered, and under the pasture coverage policy, it covers all kinds of pastures that you have. And then you can buy, mostly these crops that are eligible to be covered are crops that you cannot get FCIC insurance for. So it's mostly hay crops, some seed crops in Malheur County, your pasture crops. Those are all covered under this program. Any crop that you can get FCIC insurance for is not covered under this program. It would be covered under those insurance programs. So then if you have a crop such as a hay crop, you can establish a yield for that crop by submitting up to 10 years worth of production records, a minimum of 4 years of production records. And that will establish your production history, or your APH, as shown here on this fact sheet. That is used for determining whether or not you have a 50% or higher loss on your hay crops, for example. So it's based on your history. However, as a beginning farmer or rancher, you may not have history, and you're just now starting out by leasing one of your parents' fields, hay fields or something. And so you don't have any history. As a beginning farmer or rancher, that designation lets you use the county average, excuse me, for your history, and you're able to build an actual production history based on what the county average is. And then as you produce that crop, those county average yields are then replaced with your actual production to continue to build a production history that becomes your production history and what you are capable of producing on your farm. So then to get a loss payment, you have to notify us within 15 calendar days of the loss by filing a notice of loss, and then an application for payment once you have completed harvesting. And if you cannot harvest the crop, you need to let FSA know that, and the crop has to be appraised to determine whether or not there is some production to count toward your 50% loss on that crop. There are units that are established. Most everybody has one unit, but if you have a crop share basis with mom and dad maybe, or you are leasing pastures or crops from various producers, each one of those producers might be a separate NAP unit, and you would need an APH for each NAP unit that you have. You cannot really establish an APH on pasture loss. So pasture losses are determined based on independent assessments, and it does not require you to file a notice of loss. We get independent assessments of what the pasture loss is in the county, and those independent assessments are used to determine whether or not there are loss levels out there that would generate a pasture loss payment. So this is a way to mitigate some of the risks that you have due to weather-related conditions such as drought or flood or a hailstorm or some natural disaster that reduces your production on whatever crop you have. Mostly NAP for pasture loss would be drought or fire or something like that, rather than a hailstorm or some windstorm that might knock down your hay or blow your seed away or something like that. So, but on crop losses, there's other natural disasters that could be affecting those crops. So the next program I want to talk about is the Livestock Forage program. This program is for livestock producers. That could be beef cattle, sheep, goats. There's all kinds of livestock that could be covered under this program. And you have to have non-irrigated pastures in order to qualify for this program. It is basically, so the eligible livestock are listed on the right column here that we cover under this program. And in order to qualify, the county, it's based on what the drought monitor says for the county. Right now, we are currently in a D3 extreme drought. So we do qualify for the program for 2022. And so we will be having this program available for eligible livestock producers in Malheur County. So having eligible livestock could be livestock that you own or livestock that you lease. Either one of those types of livestock are eligible. So the second half of the program payment is your eligible pastures, non-irrigated pastures that you have, and that is based on your acreage report that you file in our office. All of our